What is up, guys? Blubberex back again here, and I just woke up from a nap. All right, so I decided let me drop this. So throughout this week, I've been really studying and trying to get better at what I do because the reality is a profitable trader needs to know when to not just being a trader, like in life generally, you need to be better than who you were last year, better than who you were last month, better than who you were last week, better than who you were last day. So it's a daily progress, right? You are trying to get better and better and better at what you do. So you might have an edge, but you can still get better trading that edge. You understand? So literally have been studying more about SMC and trying to just get better at trading supply and demand. I'm a supply and demand trader. I made a previous video on how to trade supply and demand using one time frame. But now in this video, I'm going to be teaching you how to trade supply and demand with two time frames. So this is like an advanced level of the previous one, right? I just learned how to trade it. It took me a while to figure it out. It was kind of complex. So I must warn you, if you are a beginner and you haven't really had much knowledge about SMC, the fair value gaps and everything that has to do with SMC, this video might be very confusing for you. But if you have a solid knowledge already and then you're looking forward to getting better, then let's dive right into it. However, if you're still a beginner, then I'll recommend you stick to the previous one of trading within one time frame for a very long time, and then eventually you can advance to the next level. So the beauty about this new strategy is you get much more bigger risk to reward ratios compared to trading within one time frame, because you are trying to enter at the sniper entry, the best price as possible. So you tend to catch that whole move and giving you a good risk to reward ratio. I'll say this and I'll say this again. You do not want to be trading 1:1. Yeah, I see some people, they trade 1:1. Just my win rate is 100%, my win rate is 80%, so it's all good by me. That is true. But you see, the market has different conditions, different times. Okay, a time will come whereby that your strategy will give you losses 3 times in a row. How do you survive? Right, the longevity of you in the game is key. Right, it doesn't matter if you made profit this month or next month. Can you keep that on for years? Okay, so the only way is to be able to make more than you are risking. Right, you trade 1:1, you are correct yesterday, and then today you are wrong, you are back to break even. It doesn't make any sense. And also, trading 1:1 makes you want to always be correct. It doesn't give room for you to lose or fail, because it can start affecting you psychology and your psychology, start affecting your psychology. But when you trade at least 1 to 2, right, you could be correct yesterday, you made your 2 hour, you are wrong tomorrow, and then you still have 1 hour. It's much more better. So you want to be taking at least a 1 to 2 trade. Do not take 1 to 1. Please don't. It doesn't just help you. So now let's dive into it. As you can see here, this is a 1 hour chart. So I'm going to assume, let's say you are coming into the chart on a Monday morning and you want to take your trade. First thing first, you want to zoom out to see the clearer picture like this. So as you zoom out to see the clearer picture like this, you can see on Sunday there was a strong fall on the 1 hour time frame. Note, on the 1 hour time frame. And before I go further, the two indicators I use is SD Boring Explosive by Nephew Sam, which helps to mark out every supply and demand zone on my chart, since that is what I trade. And the next one is BOS and CHOC. CH, that's BOS and CHOC, break of structure and change of character. It helps mark out every break of structure and change of character with fair value gaps. So you can just check the settings and then enable break of structures, enable change of character, enable fair value gap to make your life much more easier. So That being said, let's continue. So now imagine you are coming on a Monday, and today is Monday was 27th of January, and you see that on the 26th there was a strong fall. Okay, so now you've seen the bigger picture. Let's narrow it down. Narrowing it down like this, what can you see? You can literally see here that as at Monday morning, let's say, looking at the time here, okay, let's say you wake up 6 in the morning to analyze the market. All right, 6, the market is still falling. Now, the mistake some people will make is, oh, the market is dipping. Let me enter and still short it more. You do not want to do that. You just want to wait. Let the market finish what it is doing, and then you are looking forward to understanding where, okay, the market is no longer dipping. Sorry, from this point anymore. It's taking a reverse. All right, so the first thing you want to do is let's ignore this whole part, let's ignore it like this and assume this is 6 o'clock when you woke up. What can you see? First things you see a supply zone right here marked by the you see a supply zone marked by the indicator at this point up here. Okay, so this is a supply zone. I was like, what's wrong? Okay, it was my network. So this was a supply zone marked here, and then this was a fair value gap. Okay, so let's write this. Let's tap on this and just say supply zone. I guess my network is kind of poor. Supply zone. Just make it supply. Don't talk too much. This is an FVG. You can see it. Okay, it's marked, and then this is also another supply zone. So we mark it another supply zone like this. Make sure you're concentrating properly on the breakdown because it's complex as we move. Supply. Okay, now what would you see next? This is a fair value gap. Now this indicator would only mark this as a fair value gap if we had another break of structure to the downward side. Since it did not have another break of structure to the downward side, it's still waiting. So you want to input that yourself. That's why I said you need to understand what you are doing. In as much as indicators are there to help your life, you should be able to know how to see things with your naked eye. So this is a fair value gap like this. I'm going to write FVG. Okay, so now we marked out every key levels we want to be looking at trading for the week. A supply zone, a fair value gap. And as at that point, the market is still dipping. So now we are waiting. All right, you wait. You've marked out what happened recently and you want to see what you can do next. And 8, 9, 10, you're just paying attention to the market probably every hour since it's a 1 hour time frame. You want to watch what is happening every hour. So as a new hour closes, you check what's the market doing. So 11 o'clock, we had an upward move, 12, 1, was it? Yeah, 1, 2, like that. The move was upward. Now, okay, the market has, I think the downward side is over. And this is a high time frame. This is a 1 hour time frame. So it carries much more data compared to trading lower time frame, the 5 minutes and all. So you can say, yes, the market is an uptrend. Now, what can we observe from this place? This was the lowest point the market got to before it went up. So we are going to mark this like this. Mark this with a trend line, which we are going to classify as the point of liquidity. So let's just write liquidity. Right? So now we've marked this. This is liquidity. I hope everyone is following me. All right. So now what can you see before that upward move? This was the last sell before the aggressive buy upward, creating a demand zone at this point. So now you mark this as your demand zone. You see, we are making all the analysis on the 1 hour and not the lower time frames. So this is a demand zone like this. Let's write demand. Perfect. Now we could see supply, fair value gap, liquidity is resting at this point, and then this was the last sell. Okay, you don't want to use others. The last sell before the aggressive buy. This doesn't count. This doesn't count. This doesn't count because the buyers were not still dominant in the market. But this was the last sell before the market started going upwards properly. So now we want to mark here. Now, after marking here, the next thing you want to do is you want to use TradingView to set an alert at the top of this price, which is 226.39. 226.39. You set an alert at this point because now you don't know where the market is going to. If you want to enter and say, let me catch the moving train and long it as it's going up, bro, you will just get in at a price in which you do not have actual data to back up what you are doing. So we mark this point as our level of demand, waiting for price to come back there. Then we can enter because we see liquidity is resting at this point. We want a demand was created here, and then we want price to come back to this point. So you set your alert and you can do whatever it is you are doing because you don't want to be sitting on your chart all day trying to watch candlesticks for candlesticks. It can be stressful to you, and it's not really healthy. At the beginner days, yes, but at over time, it's not really healthy sitting down and watching your charts candlestick for candlestick, candlestick for candlestick. Just make use of alerts. So now, what do we see? Price went up, and then as at 18 o'clock, price came back down to touch that entry point. So literally later in the day, I think in the evening, that's when price came back to touch. And since you have your phone with you, TradingView will automatically alert you and be like, yeah, price has reached that point. Now, the next thing you want to do is once price reach that point, you want to go to the 1 minute time frame to look for a very, very good entry, a sniper entry. So now we'll check the 1 minute time frame. You see the so as we can see in the 1 minute time frame here, it's going to be so noisy. All right, so noisy, and we just want to look for that entry point itself. That's all we need on the 1 minute time frame. So give it the time to load, and this is why trading the lower time frame too low is not really a good idea. Well, scalpers make use of it. Everyone has their own strategy, but we just need it to get that sniper entry. So we are going back in time. We're going back in time to check it out. All right, I'm going to pause this video, and once I get there, I'll continue. Oh, because I don't want this whole video to be too long. This is okay, we are still on Thursday. We are going to Monday. Okay. The 1 minute. The 1 minute. The 1 minute. So noisy. I think my network is kind of weak. Okay. Wednesday. Going back in time. We're close. We're close. We're close. Okay. Tuesday. All right. We're getting close to Monday. So we see what happened and how to enter. Ooh. Okay. Yeah. I think we're now at the The marked demand zone there that happened on Monday. Almost done, almost done. Come on, come on, come on, come on. Now this is Monday. You just need the chat to load properly. Mm, mm, beautiful. See, the 1 minute time frame is just so much noise. Okay, so here we have it. All right, now at 18 o'clock is when it touched back here. Okay, it touched that marked zone, and trading view would have alerted us, right? So trading view would have alerted us at this point. So now let's zoom in to see what actually happened. Good, good. So what can we see here? We see that at 18 o'clock, almost 17:53, TradingView will have given us an alert that, yeah, price has crossed this your desired point, and now we are paying close attention. So as at that point, we come to the 1 minute time frame and wait to observe so we can get the perfect entry. Now, how do you get the perfect entry? You remember this downward point is our point of resting liquidity, right? So that is marked out. You can see the market breaking structure to the downward side. It first of all formed a change of character on the 1 minute time frame to the downward side, which means the market was coming down. Downward side, broke structure to the downward side, broke structure to the downward side. All this is marked out by my indicator, so it doesn't stress my life trying to look at all these things, eye for eye. Then broke structure, and this was the last break of structure to the downward side, giving us this fractal low here. And then we had a turn, break of structure to the upward side, and then a change of character to the upward side. This change of character to the upward side simply indicates that, okay, I think we are done for the reversal, and then we've grabbed enough liquidity at this zone, this demand zone, and then it's like a fuel, it's like a fuel, and then it's pushing us back to the upward side. So immediately you see this change of character after the dip in your marked out demand zone. The moment you see this change of character, then you need to look for a place to enter, because now that shows you that we are done with the downtrend. So that's why you need to be fast. Okay, the moment TradingView alerts you and tells you, hey, price has reached your point, immediately you want to move to the 1 minute time frame and start observing, because you don't have much time. So literally you could have been on the 1 minute time frame from 17 to about 19. So you just sit in your workspace and observe. You could do what you're doing, but you're paying attention to the chart. That is when you want to be looking at the chart candlestick for candlestick, not throughout the whole day, but within those hours or minutes or whatever it might be, depending on whatever you trade and the period of the day, the trading session. I think that was it. I think it was a New York session. I don't know. So immediately you see this change of character, what will you do? How do you enter at this change of character? You look for the last sell before the buy. Okay, so this was the last sell before the aggressive buy upwards. Now you're going to mark this as your demand zone. So you take a long position like this and like this. So after your change of character has been formed, you want to look for your entries at this point. It won't trigger yet. It won't trigger yet. So you mark it out. You just have to be fast. That's why I said this is not really for beginners. At this point, you need to be very fast. Once you see your change of character, that confirms it. And then where would you put your stop loss? Some people put their stop loss here. Okay, they want, nah, please. Just put your stop loss at the fractal low on that 1 minute time frame. You know we have resting liquidity down below, but this was the point in which it went down the most and it couldn't go past this. So this is the fractal low. Okay, So you set your SL here, immediately like on the exact line of that fractal low. Now, it might look long, your SL might look huge at this, but just relax. We are not using the 1 minute to set our take profits. We are using the 1 hour to set our take profits. We just need the 1 minute for that beautiful sniper entry. So I'm going to make this risk to reward very big, because if I don't, it would not really show on the 1 hour time frame. So I need to make it big like this. So as you can see, you plot that, and after plotting it, you wait. You had a change of character here. You set your entry, you set your stop loss using limit order, and then you just wait. And what do we see here? Price went back up, consolidated a bit, and started coming down again to fill in that newly created demand zone, the last sell before the buy, this demand zone here. So he created it and then also grabbed some more liquidity, and boom, we had a push to the upward side. So giving us another change of character, signifying that we are truly in an upward change. So bullish change of character, bullish change of character, and it keeps going up. So if you had missed to enter at this point, it's over. You just need to start looking for re-entries or something. And now that you are in, okay, you do not really want to set your take profits here yet. You just want to get in on the trade. So now that we are in, we are going back to the 1 hour time frame. We've caught our sniper entry. So we are going back to the 1 hour time frame to set our take profit. So how do we set our take profit on the 1 hour time frame? We're going to see that in a bit. Okay. And that 1 minute was really, really a noisy place. This is much more better. So you can see, if I didn't set the take profit, the risk to reward ratio big, you see, it's going to be so small. That's why I had to make it big, so we can see it on the 1 hour time frame. All right, so now let's zoom in, because we want to know where to put our take profit using the 1 hour time frame. We just used the 1 minute for the snapper entry. So now what will you do? You can target the previous high, which is this, the previous high, and that will give you a 1 to 4.6 risk to reward ratio. Or, price went up to this point, came down, but still hasn't gotten to this fair value gap here. Okay, I need to adjust this fair value gap. It's like this. Yeah. So it hasn't gotten to this fair value gap here. So you can decide to target this fair value gap. Now, do not say, oh yeah, you want to target that whole supply zone. Just that fair value gap. Since it hasn't tested it, it went up, failed to get there, and you're like, okay, it lacked enough momentum to get to that point, but you know it to get to that point eventually, and then it comes down, and now grab liquidity. You waited for the change of character. You didn't just enter blindly. You waited after there is a change of character and to the upward side. So you can target the fair value gap. And what do you see here? This is a 1 to 6.75 risk to reward ratio, almost 1 to 7. And how did it go? We went up, up, up until we smashed that TP beautifully, as it tested the fair value gap. On the higher time frame, fair value gaps will always be respected. Always. You can't just break through it, like probably if you're trading in 1 minute or something. It's got there, tapped into it, respected it, and then came down again. So at this point, you've already hit your TP. Now, I must say this: when trading this strategy, always make sure that you take profit. You take 50% partial profit at 1 to 3, right? Take 50% partial profit at 1 to 3, then move your stops to break even and allow the rest to run to your full TP. Why is that? So even though you have your full TP at 1 to 8 or whatever it might give you, you've secured yourself a significant amount of profit, and then you can manage your trade well. So if the trade start retracing in a way you do not like or whatever it is, you can close that position and you still made money for the day. Don't be that guy who goes so high in profits only for the price to come down and stop him out, because The truth is, in this market, we are making money in which some people it takes them a month, a year, a week to gather that money, and you're making it in a day. So do not take it for granted. Always respect money and make sure you cut your losses, manage your trades, and implement risk management properly in all you do. So just to add a quick boost to this. So as you can see, while you TP from that trade, you can quickly mark out this last, there was a last buy before a sell at this point. So you mark it out. So you mark out this buy before the sell here, and you mark out, sorry, you mark out this sell before the buy, forgive me. The sell before the buy, you mark it out. You set your alert again, just like you did. You set your alert at this point, and then also here, this last buy before the sell, you mark it out, set your alerts there, and go around having enjoy your day. Wait for price to come back, and you can see price came back again to that fresh area of demand. The indicator marks for us, but at the same time, we were able to see it with our naked eye. So immediately price comes to this point, price comes to this point, you look for your entries, the same model, the same way. You look for your entries on the 1 minute time frame, and then you see again, let's use our risk to reward ratio. So let's say you are able to target that, you know, that perfect sweet entry, target that sweet entry like this. You target that sweet entry, and you can, you've already we've mitigated this fair value gap. You can decide to target the fair value gap again, because price is trying to break through. So that gave us a what? That gave us a 1 to 9 kind of risk to reward ratio. I didn't really go down into the 1 minute to make analysis. It's too noisy down there. I can't just go back again. We saw it the first time I did. So but what happens at this point now? You can see we went up into profit, and then we came down to hit the stop loss. And why is that? This was on 25th January. Jerome Powell was speaking, so there was a news at that very day. If you were in the market, or definitely if you trade, you will understand what I'm saying. When there is a news, the market does not respect technical analysis. Although it still respected the bottom line liquidity at this point, when it came hit at SL. But that is where managing of trade comes in. So had it been, we took partial profit at 1:3. So you see 1:3 here, we've already taken partial profit, and the thing went to like 1 uh 4.6 or no. So at this point, even though your TP is full, you've taken your partial profit, and maybe at this point you move your stop loss to this resting liquidity here. You can also trail your stop loss as you go in profit, and then once the market start coming down in a way, it stops you out again in extra profit, and beautiful, you still made money instead of taking an unnecessary loss because you want to have your full TP hit. So the next thing, also marking this region, you can see when price got to this region, the third day, which was literally on Thursday, you get alerted. When you get alerted, you pay attention to the chart, and then you see the fractal high at this point. Then you can take a shot from here. Take a shot from here like this, finding your good entry using the 1 minute time frame. Find that beautiful sniper entry using the 1 minute time frame like this, and then targeting the last sell before the buy. So you can target this like this, the last sell before the buy, and that's a 1:4.8, something around that. And what do we see here? We came down significantly in profit. By then you'll have already taken your 1:3 partial profit, and then price started retracing back. So at this point, if price was retracing back in a way you do not like, you could just close your position and you make your profit. So you do not always need to be correct on your analysis, but if you manage your trade well, you will still come out at the end of the week, at the end of the month, you will come out profitable. So whatever it is you trade, Forex, futures, whatever, I trade crypto, make sure before implementing this strategy, like I said, it is complex. Before implementing it, you backtest it to some significant amount of time in the past to gather data on that pair you trade, and you can start trading it, and it will give you much more higher risk to reward ratios. And that's it. So even if you take just one win for the week or two win, even if you lose the remaining trades, you are still a profitable trader. It was nice sharing this with you guys. Globerex out, and I'll see you guys in the next video. Cheers.